Welcome everyone to UFO Moviez Q3 and 9 months FY18 earnings con call, and apologies for the technical glitch that happened yesterday. We would like to thank the management of UFO Moviez for allowing us to host this call. From the company, we have Mr. Sanjay Gaikwad, the founder and managing director, Mr. Kapil Agarwal, the joint managing director, and Mr. Ashish Maluste, the CFO. We have the management on the call. I'll hand over to Sanjay ji for his opening remarks, and then we will have the Q&A session. Over to you, Sanjay ji.
Thank you, Urmil. Greetings everyone, and thank you for rejoining us today. First of all, our sincere apologies for cancelling yesterday's call. We faced a technical issue within the conference facility yesterday. So, thanks again for your continuing support. Let me run you through the headline numbers and key operating highlights before we open the floor for questions. Consolidated revenue stood at rupees 1,402 million, lower by 6.6% YOY. EBITDA stood at rupees 367 million, lower by 17.2% YOY, primarily on account of planned cinema sunset losses, lower other operating revenues as a result of lower commission income, and expenses related to the scheme of amalgamation and arrangement with Cube Cinema Technologies. PBT and PAT stood at rupees 179 million and rupees 120 million respectively. Our advertisement revenue grew by 16% YOY to rupees 494 million during the quarter, primarily driven by improvement in volumes. Contribution from advertisement stood at 36% compared to 28% last year. Both corporate and government advertisement revenues grew by 16% YOY. In cinema advertisement inventory utilization during the quarter grew to 4.54 minutes per screen per show compared to 3.88 minutes in Q3FY17, higher by 17% YOY. The advertisement share as a percentage of advertisement revenue appears higher at 37.12% compared to 30.83% last year. The absolute advertisement share has grown by rupees 45 million YOY on account of share paid to UMW and certain South screens. The higher share paid to South screens as MG in lieu of the rental income, which was earlier zero pre-GST. On a like-for-like basis, the advertisement share has grown only by rupees 15 million YOY. Consequently, the comparable advertisement share as a percentage of advertisement revenue is now at 31.99% compared to 30.83% last year. Caravan Talkies operated a peak 41 vans in Q3 FY18. The business contributed rupees 24.4 million of advertisement revenue during the quarter compared to rupees 8.4 million in Q3 FY17. The yield per van has more than doubled over last year. As a result of higher revenues, VDSPL's Q3 FY18 losses has reduced to rupees 7.6 million from rupees 19.6 million in Q3 FY17. This is an investment for future growth, and we are currently establishing the price. During the quarter, D Cinema VPF gross revenue declined by rupees 121 million YOY, and the net revenues was down rupees 79 million YOY on account of the planned D Cinema sunset. The company's DSOs stand at 105 for 4 days as on December 31st, 2017. Net cash stood at rupees 649.3 million as on December 31st, 2017 compared to rupees 519.7 million as on September 30th, 2017. Finally, we expect the overall business to perform well on the back of a strong content pipeline in current year 2018. With that, I open the floor to take your questions. Thank you.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions can press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Avnish Roy from Edelweiss. Please go ahead.
Sir, my first question is on ad revenue. In terms of yield, I don't see much of an increase because revenue increase and minutes increase is almost similar, just a 2% difference. Your minute increase is around 15%, revenue increase is 17%. So just 2% rate increase. Sir, why we are not able to command a more premium? Because we are seeing other multiplex players and broadcasters grow much stronger. So why that's not happening?
Avnish, thanks for your question. Basically, you see that last 2 or 3 quarters post GST and post demonetization, last few quarters have been very difficult for the business. So much so that last quarter we in fact had a negative growth. So right now, and we are only utilizing 4.5 minutes of inventory as compared to when we compare with multiplexes, which is a more mature medium. They are utilizing between 15 to 20 minutes of inventory. So right now we are trying to do the volume-led growth, then the value-led growth or the price-led growth. So, and 50% of the business in any case comes from government and PSUs, which are on a fixed price. So on 50% there is no flexibility until the government increases the price, which is in process. And on the rest 50%, corporate sector, as I said, it was a difficult period. So we are glad that we have at least been able to deliver a 16% growth. So there is a 17% growth in terms of the minutes utilization, and there is a 16% growth in terms of the overall volume, overall value. So which is actually at par. That means the price has been constant, and I'm happy that we have at least been able to grow while maintaining the old price, and we did not have to drop the prices.
2 follow-ups here. So your ad yield strategy, is that a function of the economy and overall ad growth, or is that a function of your inventory levels reaching a threshold level at some stage of, say, currently 4.5 minutes per screen per show? Is there a number of this wherein you will take a yield hike?
Yes. So basically, we have spoken actually about it in the past calls also, that I think next 1 or 2 years we will be concentrating more on the volume-led growth than the value or the price-led growth. So pricing, what we do is that we keep, so now there is a mixed bag actually. So let's not talk about the government sector because that is constant. On the corporate sector, it's a mixed bag. So we have multiple types of contracts. So there are people who come and who are willing to give us an annual business or a 6-month business or a 4-month business, irrespective of the kind of movie which is releasing. There we offer a lower yield because we know that irrespective of the movie, week on week, whether the inventory utilization is high or low, this ad is going to run. So that is where we do it at a much lower price. But we write a bigger check. Then whenever it is the movie-related business or in the peak weeks, which are like typically 10 to 12 weeks in a year, are peak weeks where big movies are releasing. So in those weeks, actually we increase the price. So we keep playing with the price. So what you see at the end of the day is an average price. But there is a huge gap between the lowest price that we offer for an annual business and the peak price that we charge. So we keep playing with the price week on week. But overall strategy today is to first achieve volume. When you go to 6, 7, 8 minutes of inventory utilization, then you start hardening the price. Because that is when you are in demand. Right now it is a push medium. We are trying to go to the pull medium, where there is a pull factor and people actually come and want to advertise on this network. And actually, you had asked for it, but the Cube merger is a step in that direction so that we can create pull by having a pan-India advertising network. And that I think post-merger, it may be possible that we may be able to push the prices.
Sir, one follow-up here.
To what Kapil has said is we are parallelly working on the measurement strategy, and once that strategy falls in place, we hope we'll be able to increase the yield substantially. In the absence of measurement numbers is where the strategy of consolidation and the peak weeks, as Kapil said, is working. But the moment measurement is in place, our ability to push the yield will be significantly high.
So this measurement thing, any timelines, and will it be syndicated, or is it some product off the shelf or in-house you are developing this?
No, it's a combination of the in-house product. It's a combination of the third-party research agency like IMRB, with whom we are working on. It's a combination of couple of things which we are working on, and also with the advertisers or the advertising agencies, what is that will make them comfortable in accepting the measurement.
But there will be cost implication also, right?
Yeah, there will be cost. So basically, what Sanjay mentioned is there are like combination of various things. So one is there are certain number of screens which are do have the online ticketing system. So that is where the measurement is already given. Then there are certain products that we have within the company and with Cube, which we will be launching, which will help us with the measurement. That will cover certain number of theaters. For the rest, we have already actually appointed IMRB, and we are already running a pilot. And in that, once the results of the pilot are out, which are expected very shortly, the pilot is already over. And then we will be instituting a round-the-year research. So we have a currency called the measurement as a combination of these three. On terms of the cost, the first part, which is the online ticketing system, there is no cost practically. The second one, where we launch our own products and that helps us, that will be some small capex in that, which is insignificant. And third, yes, IMRB, if you appoint them, you have to pay them. But I think the returns are disproportionate to what the cost of that research is. And accordingly, to keep the right optimum costs, a very optimum combination of the theaters and the sample size in consultation with IMRB has been selected, so that we keep optimum cost optimization and the result optimization and acceptability with the advertisers. And we are also bringing the major ad agencies as part of this research, so that this is not our research, this is the industry research. So all those measures are being taken, which should bring significant, hopefully good results in next few quarters.
The last follow-up from my side, government ads seem to have done well for you. Unlike for a lot of other media companies, this quarter has been a very tough quarter from government ads perspective. For you, it seems to have grown at 15-16%. So one is, how have you managed that? And in terms of visibility, because good number of state elections and general elections also next year, do you expect that to continue?
Firstly, I think traditionally, if you see, our medium is more apt for the government, because government advertising or the government messages, whether you talk of Swachh Bharat Abhiyan or financial inclusion, Jan Dhan Yojana or the NECO or the anti-AIDS program, etc., they are more meant for masses, not for classes. And we actually provide a very, very mass network. So government, for last 7-8 years, since first 7 years back when we first got empaneled, government has taken different departments fancy for this. So our 80% of our advertising 5 years back used to come actually from government sources, and now it has dropped to 50% of the expanded network. So government continues to be a significant advertiser on our medium year on year. So it is not the first year or first quarter, it is always there because of the utility of this medium from the government point of view. Mass advertising reaching the deep down, which no other medium can actually reach, because all other advertising is very generic. This is very specific, they can go up to the village level. That is point number one. Secondly, in fact, this quarter from the government advertising was very tough for us also, because there were a lot of changes, and our expectation was that the growth would have been much higher than the 16% which we achieved. So that's where it is.
What is the outlook?
I think current quarter should be better than the Q4 should be better than Q3.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Rishi Maheshwari from Aksa Capital. Please go ahead.
Thanks for taking my question. Just a little more on the advertisement outlook. I thought I could understand in context of three parameters, some of which you've already discussed a little.
Can you speak up a bit?
Yes. Am I audible now?
Yeah, now it is much better.
Sorry. So I thought I'll just understand the same outlook on the ad revenue in context of three parameters, some of which may be reputable of what you suggested, but I thought I'd probe a little in terms of near-term understanding. So last quarter, you mentioned that the government ad budget only started uptake from middle of last quarter, and yet you managed to showcase about 16% growth. Clearly, ad inventory being perishable, I presume that half quarter would mean half quarter ad revenue only. Therefore, can it not be extrapolated to a decent growth in Q4 onwards? I'm also correlating the statement with your last quarter con call where you mentioned that before demonetization you were running at about 50% plus ad revenue growth, but it suddenly slumped after demon and post that GST. So from that perspective, I'm seeing that there is enough scope of growth in the ad revenue, much beyond the 15-16% that you've delivered. So what's your views on the same?
Let me first pick up your second question. So that when we talked about 50% plus growth before demonetization, that we mentioned in the context of the first 40 days of that quarter. So it was a quarterly number, not an annual number. Now, if you study the pattern in our business, depending on the number of films, depending on various external events, for example, a Cricket World Cup happening or an IPL happening, so release of films, the festive period and non-festive period, the exam period. So our growth has been very, quarterly the number is very vastly different from one quarter to the other quarter. So in one quarter we may deliver 8% growth, in next subsequent quarter we may be delivering a 50% growth. So please don't take it as in the context that we were always delivering a 50% growth. It was in the context of that particular quarter and first 40 days. So that time we were having a good 50% growth and numbers was looking very good. That is number one. Number two, yes, this quarter, as I said, will be better. Now I won't speculate and I won't go into extrapolation. We have already 1.5 months down the Q1. We are seeing the number is better because that we are seeing that overall the impact of demon is going down. Impact of GST is slowly waning away. Government advertising is slightly coming back. So we are hoping that there will be a better quarter. But please understand also one thing. While in absolute terms we may show much better growth than Q3, but in the percentage growth terms, Q4 last year was better than Q3. So our base will also be higher. So the overall number should be good, much better than the current month, but in terms of the percentage we will see. I think in 1.5 months that number will also be out.
Sure. Secondly, you'd also mentioned that you'd start taking ad pricing hike once you establish a certain threshold of inventory, which you'd earlier mentioned in your calls would be 9 to 10 minutes. And a while ago you mentioned that it'll take you about a year or 2 years for taking that ad pricing hike. Are you implying that is it possible for us to move from 4.5 minutes of inventory to say about 8-9 minutes of inventory in a matter of 2 years?
I think if you analyze our various statements, even just now, like I said, when we start utilizing 7-8 minutes, it is very contextual. Then Mr. Gaikwad also mentioned that once we put things like measurement etc. in place, we will be able to garner a much better pricing. Because today when you talk about multiplex, the exact measurement is available, aspirational value is there. We are operating an all India network. Consolidation was a major issue before us. So I don't think, so if you analyze various statements and put them in the right context, then you will see that there are various factors which affect the pricing. So we are taking all these measures, measurement, consolidation, uptake of the inventory. So I don't think I can give a number that exactly at 8 minutes there will be a trigger and where we'll be able to get the pricing up, or at 10 minutes we'll be getting the price. It's a very qualitative and a slow process, and we may be able to, with the consolidation, because what the consolidation does is that today we are very weak in South. South, all cream screens are with Cube Cinema. We are pretty strong in non-South, where Cube is weak. Now, once we combine, then we will be the only platform, all India platform in the country. You compare with any TV, which are all regional language. You look at any newspaper, any print media, they are all regional. This will be the only network which will be end-to-end all India network in 2,600 cities, towns and villages. That is also going to, help us increase the pricing. So I am not saying that, in 1 year we will cross 10 minutes or we will cross 9 minutes. It's a combination of various measures where we are hoping that we will be able to uptake the prices.
Sure. Thanks. Thanks for the clarification. Just a couple of more questions. One on e-cinema. This revenue seems to have dropped pretty significantly when I measure quarter on quarter. One is that, and the second was if you can throw some outlook on your margins. There seems to be several reasons that the margins have not, performed as per expectations this quarter. One of which is one of the others you mentioned. So, how do we look at the margins going forward?
Yeah. Hi Rishi, you mentioned about e-cinema drop or an e-cinema drop?
E-cinema, VPF e-cinema drop that seems to have come down from 30 crores to about 27 crores quarter on quarter.
Yeah, so if you actually see, similar would be the trend even in the last year. So basically the e-cinema revenue as it pans out over 4 quarters primarily follows the pattern of the quality of the films those get released. And this pattern, you would actually more or less see that quarter on quarter there is a change, even in the previous years. This is the reason for the e-cinema reduction. As the movies would start becoming better for us, the revenue would again pick up. If the question is on D-cinema, then the D-cinema has been explained in the past.
No, I know the sunset clause. Fair enough. You mentioned that Q2 was actually a weak quarter from a content perspective, and so Q3 was not as weak given Golmaal and there were other movies released last quarter. So I could not reconcile, whether the content was really weak in Q3 or was it something else?
Actually, the content was very weak in Q3. If you look at Q4 or in the current calendar year, 2018, the content is very strong. Last year, the Q3, even Q2 and Q3, both content was very weak. You see the results of even the multiplexes. They all have suffered in Q3, so far as the theatrical collection, because of the quality of content. I mean, one of the major films, Padmavat, which could not release, where, everybody was banking, both in terms of advertising and in terms of the box office collection. And for us, the e-cinema VPF, it didn't come. And actually, when it came, there was uncertainty. It could not give the full benefit of its release in January, because till 4 days before there was no certainty whether the movie will release. So the advertisement didn't get booked so much because advertiser had to block his money at least a week in advance, and they didn't know. And where all will it release, we didn't know. So Q3 was pretty weak actually in content, if you study.
Sure.
A couple of movies doesn't matter because you need continuous content. So if one movie a month comes, it doesn't help. You need continuous. So the level 2 movies after the 2 or 3 top movies, there was a huge gap. There were no audiences in that.
Okay. And your outlook on margins this quarter, what I've consistently been seeing for the last 3 quarters, now I know there have been a lot of one-offs given the GST and DMON impact, but that margins, that expenses have not reduced commensurate to the revenue. So obviously there is a lot of fixed costs involved in it. So if you can help us understand, on a consistent basis, if you grow by 15-20% ad revenue growth, then in that case, how should we look at margins?
So basically, so far as expenses is concerned, please understand that ours is an infrastructure company. In the infrastructure company, the fixed overheads are the major chunk of the overheads. Like for example, whether we release 1,000 movies or 1,200 movies or 1,800 movies, our bandwidth cost is constant. the number of people, number of offices, number of, support staff is same. So whether we have, 4,000 screens or 5,000 screens or even 7,000 screens, the bandwidth cost, everything will remain constant. So being infrastructure project, the overheads major overheads are actually fixed. And that is exactly where the advantage is, that when you hit that growth, your variable costs don't go up when you start growing in various areas. And that is where, we have been constantly operating on a 30% plus EBITDA margin. That is a reason of this, because fixed overhead, and whenever we cross certain threshold of revenue growth, except probably this quarter, one quarter, bad quarter like this or something, somewhere. So that's where it is.
Sure, sir. So lastly, just if you can indicatively suggest how's the performance of Cube has been. I know you may not be completely privy about it, but from industry sources on ground understanding, if you can let us know how's the performance of Cube has been in the last couple of quarters.
I didn't say performance of who?
Cube.
I am not actually honestly privy to that number right now. So I can't speak, but I think it should be, I guess it should be in line with our performance, actually. Because you see the advertising revenue from the government is very similar pattern as ours. Because government, whenever an advertisement is decided, it is divided amongst various operators in the proportion of the number of screens they have. So that should follow the same pattern. In terms of corporate, our advertising pipeline is stronger than theirs in terms of the corporate advertisement, but their pattern should be very much the same as they have, and they also are doing a lot of work in pushing the corporate advertising. So I hope they have done better than that. But overall, should be very similar pattern.
All right. Thanks. I joined the queue. Thank you very much.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Kashyap Javeri from MK Global. Please go ahead.
Yeah, hi, thank you very much for the opportunity. I have got 3 questions. One,
can you speak a little loudly, please?
Am I audible?
Actually, it's not that good.
Hello.
But better.
No. Yeah. So question number 1 is that if I look at VPF per screen for D Cinema, that's I joined the call a little late, so I don't know whether this has been discussed, but VPF per screen has declined very sharply in this quarter plus for 9 months. So what would be the reason for that? 2 is that if I look at advertisement sharing rate, that's about high of about 37% in this quarter. Now with a similar revenue size, we have seen a significantly lower sharing rate in the past. So why that number is so high? Question number 3 is that if you could help me with the cash flow from operations number for M9. And 4th is that does the Infinity War Avengers release in E-Cinema or it's only a D-Cinema?
What's the last question you mentioned?
Avengers Infinity War, which is coming in, back end of April, does it come in E-Cinema also, or it's only a D-Cinema movie?
Hollywood movie.
Yeah.
Okay, so I'll take your questions one by one. The E-Cinema reduction that you see is exactly in line with the estimates that we have given in the past. And if you are on slide 18, where we give the operating parameters, you can actually see the decline happening sharply. And that decline is primarily because of, as we explained, the sunset reduction. This year, the total estimated impact was 24 crores.
So I think that I'm very, very much well versed with. I thought this would be more driven by the number of screens reduction than the VPF per screen reduction.
Okay, so the way it pans out is the number of screen remain the same, the revenue that you can charge to certain sets of distributors, your ability goes away under a contract.
Okay.
And that's the reason why in the denominator you will continue to have the screens, but in numerator you will have lower revenue.
Okay.
So that's the reason. So
just to clarify, little bit explained. So, suppose there are 50 movies releasing on a particular screen.
Right.
So, you are charging for 50 movies. Now you are charging only for 40 movies.
Okay.
So, the number of screens remains same, but you are only charging for 40 movies instead of 50 movies. So, your overall VPF goes down. So, numerator changes. Denominator remains same. So, that is where per screen drop happens. And this is under the, which you are aware of, you said, under the Hollywood studio contracts.
Okay, sure. Yeah.
Kashyap, your second question was around advertisement share, why has that gone up? And since it was a significant aspect and optically it was looking a little problematic, we decided to address it in the opening remarks itself. So probably you would have missed it. So I'll repeat the details. There are two components to it. One is post GST, our business offerings in the southern screens we realigned, and previously there was no rental that was being charged there. Now we started charging a marginal rental there, but this was purely for addressing the material movement related issues arising out of GST, and as a result the theatres were not required to pay us anything in the form of a rental, and therefore on the other hand the advertisement revenue share had contractually was increased. So now what happens is you will find the rental income going up and correspondingly the ad share going up. When you in isolation look at ad share as a percentage of advertisement revenue, it looks negative. The impact in this quarter purely of this component of the rental, which was absent in the previous year's quarter, was to the tune of 1 or 1.2 crores. The second impact, so total the incremental advertisement share was 4.5 crores, of which about 1 to 1.2 crores was attributable to this aspect. Second element is the incremental ad share that is now going to UMW screens, which strategically we acquired for advertisement inventory monetization from beginning of Q2 this year. And since these theatres are in the process of getting integrated with our network, the revenue generation on these screens is yet to reach to a level where our screens generate the revenue. However, contractually the sharing is fixed, so therefore you have percentage-wise higher share going to these screens even in Q3. We expect that in next couple of quarters it should align with the average sharing that we have on our network, which is in the range of 30-31%. And as a result, the movement of the advertisement share, if you take on a like-to-like basis, has moved up from close to 30.6% in last quarter to about 31.9% in the current quarter. So this was an explanation for point 2.
Right.
Cash from operations I've just asked my team to work out.
Sure.
And your fourth question was about the movie that is going to come only on the D Cinema network.
Okay.
So can we move to the next question?
Sure. Before we move to the next question, we'd like to inform participants once again that in order to ensure that the management is able to address questions from all participants of the conference, please limit your questions to 2 per participant. The next question is from the line of Nida Khilani from B&K Securities. Please go ahead.
Yes, hi sir. So just wanted to qualitatively understand what is the peak at times we hit, when we have a 250 crore budget or a gross collection movie releasing, like for example Padmavat or Bahubali, etc. So what are the peak at times that we hit? Hello?
Yeah, in the big movies, we have seen that we often cross even 15 minutes.
15 minutes,
14, 15 minutes also we hit in few movies, few top movies. Well, it didn't happen in Padmavat because we did not get the selling time. So when it was releasing in December, we in fact had sold more than 15 minutes of inventory. But when it was deferred, and till 4 days before the release of the movie also it was not certain whether the movie will release or not, and where all will it release, how much area will be covered. So that is where the advertisers were not willing to. So actually we probably got only 1/3 of revenue as compared to what we would have got otherwise in Q4. Otherwise, our revenue in Q4 also would have been much higher. So, Padmavat is probably not the right example. But yes, we hit 15 minutes plus in movies like Tiger Zinda, for example. Or Padmavat also would have happened if it had released in due course.
Okay, understood, sir. Sir, and on the merger with Cube, if you could just give the, what stage are we in, and post the merger also, how much time would it take to actually realize the synergies that we are sort of expecting to come to us?
So merger, the stage is that as a listed company, we signed the agreement with Cube on the 1st of November. Then the application as per rules was made to the stock exchanges. And the stock exchanges, they study the scheme of amalgamation. They ask a lot of questions, back and forth. That has been completed. Then they, put it for public comments and objections on their website and give it 21 days time. They did, and that time was over last month in the month of second week of January. Fortunately, not a single objection was filed. Now after that, after completing their study, they have forwarded it to SEBI. So right now the scheme is pending with SEBI. Once SEBI clears the scheme, which is expected in the next few weeks, then we will have to file with the NCLT. There are two NCLTs involved. NCLT Mumbai, because we are our headquarters, our registered office is Mumbai, and in Chennai, where Cube has the registered office. After two NCLTs, which is again a few months process time, holistically we are expecting that it should happen by September, October. So by September, October, the merger process should be through, subject to of course, all the regulatory and the legal approvals. This is the timeline which the bankers and the lawyers have given to us. Expected timelines based on the past experience. That is number one. Number two, I think after that we will start the process of integration. So the full benefit we can probably see in FY20, because currently we are sitting in FY. It will be cleared by the middle or towards the second half of FY19. Give us few months for integration, which we can't start any process right now legally. So FY20, I think it should be, hopefully, we will start seeing the good benefit of the merger, of the amalgamation.
Thank you. The next question is from the line of Mayur Gathani from OHM Group.
Hi, thank you for the opportunity. I may have missed this, sir, but any inputs on the hyperlocal advertisement? How has that progressed? And anything on Caravan? How many vans utilized, and what's the utilization rate today?
So both these projects are moving absolutely in the positive direction. There is a lot of learning which is going into it. So far as Caravan is concerned, unlike the UFOs advertising, on-screen advertising business, which I said is volume-led right now, not the price-led. On the contrary, because this business was at a much smaller scale, 100 plus vans, so we have been actually now and we had to start this business at a very, very low price. So we have been, in fact, now concentrating for last 2 quarters post monsoons on the price-led growth. So I am very happy to say that, as compared to the YOY, in this quarter, in last quarter, Q3, our pricing has been more than 2 times of the pricing that we charged last year. So we have been concentrating instead, because what happens is that if it is 2 times, if I am running 30 or 40 vans, I am running equivalent to 70 or 80 vans if I compare the pricing for the last year, which means more price, less overheads. So as a consequence, despite running lower number of vans, our revenue has become 3 times of what it was last year. Our losses have come down to almost 1/3, which number is already there. So this is what has happened on that. So far as frames is concerned, it is moving slowly and steadily. We are realigning that business. Also, we are working on realignment of that business in terms of the kind of the DSAs that we had. So there is a lot of churn which is happening in the DSAs, because DSAs come, they appoint, they get appointed, they put money and they are not able to sell. So there is a lot of realignment and rethinking we are doing in that. But it is profitable. It is already giving us some steady revenue. It's approximately in the range of 3.5 to 4 crore rupees of revenue, annualized revenue, which is at 4 crore rupees run rate right now. Which was last year it was 1.5 crore. Now it has moved to 4 crore annualized business.
Okay. And number of vans being used, so what's the plan? I mean, you intend to increase the number of vans?
So number of vans is constant, as we have promised to the market also, that till we see that all vans are getting utilized, we are not going to add the vans. So we are not incurring any capex on that business. We are trying to minimize, as I said, the losses in that business. One of the major chunk which is likely to happen is that we have been camping with the government, and all departments in the government is very, very gung-ho about this line of business. But, DAVP, INB ministry, as it takes a lot of time in any new medium to get empaneled. So we are in that process. We are hoping that as soon as the empanelment happens, the uptake should be pretty high, and then so we will start pushing doing new capex only and only when we see that all these 100 vans are getting utilized.
Okay, but what I meant was how many are being utilized currently, sir?
That number keeps going up and down. Last quarter we did a peak of 41 vans, and as I said that since we have doubled the pricing, so you can imagine what kind of average number of vans on that we might be doing.
Okay, so in that case, it's all 41 vans. It's only private advertisement that is coming in.
There have been some public sector also which is done. So it is not only corporate sector. Public, you see, so in government there are two sectors. One is the central and state government. They are very, very comfortable if the DAVP is there, then only they advertise. So far as public sector is concerned, public sector is not bound by DAVP, but they are very comfortable if DAVP is also there. So there have been public sector who has advertised on this. Then what they do is they publish their own tender, they invite the tender and they establish the pricing, because they have to be absolutely transparent. So it is not only the corporate sector, public sector is also advertised in this quarter.
Okay, and on the DAVP, the government advertisement, when do we expect any price revision, or when was it last taken by them?
Well, there has been no price revision. So the only time the price was given is in 2010. It was almost 7.5 years, little over 7 years back. So that was the only price which we are getting even today. We are camping with the government for last 5 years. The indication is that it is now in the final stage of the consideration of the government. Like a big ship, it takes a lot of time in turning, same as the government. So, but it seems that it is on the last stage. So maybe in next couple of quarters it might happen.
So this price hike is only limited to cinema advertising, or it is for TVs and as well everything?
Honestly, I'm not aware of that, because we are only following up about our medium. So I'm not sure whether other mediums are also capping, because there might be price increases for other mediums earlier. Because our medium has not seen any price increase at all since it got empaneled in 2010. So honestly, I am not aware of other mediums. We are only following up ours.
Okay. Fair, sir. Thank you and all the best.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from the line of Yash Zaveri from YCAP. Please go ahead.
Yeah. Hi. I have two questions. One is, can you give us an update on the strike or the negotiations going on with the Southern film industry? And the second one is, can you give us an update on Nova Cinemas?
Yeah, Southern film industry is very simple that I don't think there is any strike or there is going to be any strike. to be honest with you. It is just that they are trying to renegotiate the prices with us. While we believe, you see, number one, since our prices are the same, so what we charge to the distributor, which prices were there in 2010. Our last revision in the southern market was in 2010. So they have been creating an unnecessary propaganda that, digital cinema operators are charging exorbitant prices and all that stuff, and they don't reduce the price, we will go on strike. I do not understand to what avail. Are they going to shut the film industry? Our prices are so reasonable, which is less than 20% of the real cost which they used to incur earlier. In the same price which they used to invest in the reels, now they reach 5 times more number of cinemas. All box office collection, all upside goes to them. When you hear of 100 crore, 200 crore, 300 crore, 400 crore collection, this is our contribution to the industry. Content was same, actors were same, everything was same. But instead of 500 screens, now they go to 3,000, 4,000 screens. So there is no genesis of this strike. There is no rationale of this threat of strike. That's what we believe. And we obviously, run our business, our commerce based on our shareholder value. So good luck to them.
Okay, so as things stand, you all are still at an impasse. Is that correct?
Sorry?
As things stand, you all are still at an impasse?
I didn't understand what you are saying.
As of today, you have no agreement with them, right? They've still threatened to go ahead with the strike on 1st March.
No, we are engaging with them, and we hope that good sense will prevail. So we had a meeting with them week before last.
Okay.
There is another meeting which is scheduled for tomorrow. So tomorrow there is another meeting in Tamil Nadu, in Chennai. Therefore, last week we had a meeting in Hyderabad with their combined association. So we are explaining the rationale to them that don't be unreasonable. I mean, we are all partners in business at the end of the day. We are not working against each other. We have only added to your well-being. Why are you trying to, create this kind of... But there seems to be a lot of confusion amongst various players also at that end. So we don't know what is the genesis of this claim. Because our pricing is so reasonable and our overheads have increased. Inflation, as shareholders, as analysts, you ask us that why your revenue is not going up, and they are saying that we are charging very exorbitant.
Sure, I understand. Just in the press reports, a producer was saying that they are charged 10,000 rupees per cinema per show. That would be for D cinema, right? E cinema, I believe, our average is in the region of 5,500 per screen.
No,
per week.
I think this is a complete misnomer.
Okay.
Our charges in non-South are, we charge 425 rupees per show in the first week. We charge 360 rupees in the second week, and third week onwards we don't charge anything, and we cap it at 20,000 rupees per location. So which means if there are 5 screens on the location and that Tiger Zinda released in 5 screens, which is business of 20-30 lakhs, where normally he would have to send 2 or 3 prints. Today he only has to pay 20,000 rupees for the entire complex. So we are so reasonable. In the South, they wanted a different rate. They didn't want the paper show because the big movies run a lot of shows. So they didn't want to pay the paper show. So they wanted a weekly charge. So we introduced a weekly charge. So actually the first week price is less than 10, I think 9,500 rupees or something. Is the first week price irrespective of the number of shows.
This is for E cinema or D cinema?
Actually, North the structure is different, South the structure is different. So the D and E both are, there is hardly a 10% difference between the D cinema prices and E cinema prices. The structure is very same. In the North, the structure is very different. Because in the North, in major screens, it's a 20,000 rupees fixed charge for D cinema, while E cinema is all on the paper show. South is different.
Okay.
But it is in the range, both for E and D, between 9 to 11,000 rupees in the first week. Second week it drops to around 7,000 rupees. And then there is a cap on that also. So this is, I don't know from where this number has come. I'm
just quoting from a press report.
Rupees per show number. I wish I could get even 1,000 rupees per show. I would be very happy. We will be able to give golden returns to the shareholders if we get even, forget 1,000, even 800 rupees if somebody pays us.
Okay. And the second question was on Nova Cinemas, if you can update us.
So Nova Cinema, total number of screens currently which are live are 23 with 5,977 sitting capacity. There are 19 screens where there is a work in progress. So where the total sitting capacity is 3,705.
So, and are you seeing interest from potential franchise partners to set up more screens, or?
Yeah. In fact, we are seeing a lot of interest, but my take is we are completely hoping to have couple of greenfield projects up and running, because the moment I have the greenfield projects, we are working with various state governments to give one window clearance, and that is where I feel that scalability will come. So that is still, I would say, that greenfield project establishing 8-10 pilots is still 1.5 years away.
So, I'm sorry, these greenfield projects, we will be doing it all by ourselves, or we will be getting a partner to invest with us?
Partners.
Okay. So, that's all from me. Thank you.
Yeah, our stated policy, just to clarify, is that we are not investing in the normal, in the Nova Cinema business, other than the first few projects, and that also part of the money. Major money is going to come from them, and we are not getting into the exhibition business that we are going to invest 100 or 200 crores. So we had set aside a budget of 15 crores last year. That is outside we will invest right now, and we are yet to we have used only a fraction of that so far. So we are very, very conscious that we are not investing in the exhibition business.
Okay, that's all from me. Thank you.
Thank you. Next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Apologies, I joined the call a bit late, but I heard you were commenting on some independent currency to be developed for the single screen theaters. Just wanted some thoughts on that. Hello.
Yeah, Ankur.
Yeah, hi sir.
Yeah, so basically post this merger with Cube, so there are certain products with which we are trying to develop some currencies, even taking some of the big advertisement agencies in that process, so it becomes a universal currency. So as Kapil mentioned previously, I don't know whether you were there at that time or not. So the currency, basically we have combined network of close to 7,300 screens where we have the media rights, so which is almost 85% of the total, approximately that number of total tickets sold or the ad impressions we deliver. To create a currency for that business, so there are some screens out of this which already has a computer ticketing system. So we want to integrate with a technology called iCount, so through which we will be developing some sort of a dashboard. So using those technologies plus we have our own Just Tickets platform, for which we have access to some of the box office ticketing systems. So that will also be integrated. And from the balance universe where we do not have the ticket measuring system, that's where we are engaging with agency called IMRB, who would be on a weekly basis, on a periodic basis, doing the measurement and giving the projection for the balance number of screens. It's like a TRP kind of system. So whole thing will be integrated into a dashboard, and that's where basically we are working towards. And then that currency which will help us do some sort of give comfort to the advertisers in terms of that whenever they are doing some investment, what is the current ROI which they will be getting.
Sure. Sanjay ji, just few clarifications. So have you already approached the single screen guys for this initiative, and IMRB is already on board, or it is still a work in progress?
No, IMRB is already on board. In fact, they are conducting the pilot. So the pilot result is expected in a week's time, couple of weeks time, and once we go through that pilot results, once we go through the agencies, we will be doing it, we'll be rolling it out. So I see that it will take a couple of quarters before this currency gets actually established.
So let's say FY19, we'll see this currency coming in?
we are expecting.
Great, sir. Thanks a lot and all the best.
Thank you.
That's the idea.
Thank you. Before we take the next question, we'd like to inform participants that you may press star and 1 to join the question queue. The next question is from the line of Harsha M. from Photon. Please go ahead.
Hello. Hello.
Yes, please go ahead.
Yeah. So before the advent of digitization, what was the actual analog print cost per print?
The analog print cost, depending on the number of prints which were required for each movie, varied between 50 to 70,000 rupees.
In addition to that, there was a logistic cost.
And then there was a delivery cost because prints had to be delivered in the remotest area. So print used to actually go by planes or by trains and all. It used to take a lot of time as well as the logistics cost. So almost what industry told us that between 5 to 10,000 rupees used to be the average cost of delivery of each print, depending on the geography where how far the movie is releasing.
And one more aspect, the worst element of that arrangement was it was a sunk cost. So that cost had to be incurred upfront, irrespective of knowing the outcome of the film.
Okay, so there is a considerable difference with our cost. But one of the arguments that they have been talking about is that integrators have invested in these equipments around a decade back, and they've already recovered all the investment over the course of all these years. So why should we continue to pay this VPF forever?
This is a complete misnomer and misunderstanding in their mind, because the problem is that, okay, let's understand the analog era. Analog era, there used to be an analog projector and there used to be analog print, where the cost of the projector was a very small component. So the fixed cost, the upfront capex was very small. There was hardly any maintenance of that. These projectors used to go for 30, 40, 50 years. So, the grandfather put the cinema and he bought a projector for whatever, couple of lakhs at that point of time, and even today those projectors were being used and no maintenance, literally no maintenance cost. As against that, but the operating cost, the variable cost, which is the cost of prints, was very high. This is reversed now. So capex is number one, very, very high. Number two, these are all electronics sitting in non-optimal conditions in all these old theaters, in those huge rooms with all the dust and heat around. So these projectors have to be very heavily maintained. So actually you will be surprised that just the cost of maintaining the network and cost of maintaining these projectors is more than half of the virtual print fee that we charge from them goes into that annually. It is such a heavy network. We have thousands of projectors and servers lying over 40 or 50 offices around the world. We have around 400 engineers around the year to address this, which was not the problem in the analog era. So they are still thinking of the analog era, while electronics have to be maintained. Secondly, these projectors very fast go out of life. So every investor call these questions comes up, how much money are you spending, capex are you incurring? And we keep explaining that 50 crore, 60 crore, 50 to 60 crore is our replacement capex. That means 50 to 60 crore every year we have to, just to replace these projectors, which keep going out of life, the light keeps dimming, the dust goes inside. So that capex we have to incur. So we have to maintain them, we have to replace them. They are the factors which they don't consider. They think that, so it's a lack of understanding on their part, which during our interaction we are trying to explain to them that please understand that this is not the analog era. Your cost has gone down permanently. For your life you would have kept incurring that 50, 60 or 70,000 rupees per print. Now that cost has gone down to almost 10, 12,000 a print on an average. But you have to continue paying this, because without that the network cannot be maintained. Look at the scenario when they stop paying us, we stop maintaining it. Do you think that all these thousands of individual cinema owners have the wherewithal to either maintain these projectors or replace them at their own cost? So as an organized player, we are helping the film industry in having it keeping them up and running, both from the exhibitor's point of view as well as the distributor's point of view. So this is a very incorrect argument that we have already invested, recovered the cost, now we should get out. The whole network will fail. The film industry will stop functioning if we do that.
Okay, fine. Thanks.
Thank you. The next question is from the line of Krunal Shah from Inam Holdings. Please go ahead.
Oh, ये तो उससे मिले थे उसने. वही है, बच्चा.
Hello, sir. Just one clarification I require. The number of UFO screens in single screen.
Krunal, I'm sorry to interrupt. Could you please speak a little louder? We can barely hear you.
Are you able to hear me now?
You have to speak up a little bit more or come closer to the mic actually because...
Sir, I'm on the handset now, sir.
Okay. Oh, this is much better now.
This is better, sir? Yeah. Okay.
100%.
Yeah,
very good.
So just one question I have, one clarification small. The number of UFO advertisement screens has gone down on a quarter-on-quarter basis. So that would be adjusting for the closure of single screens, right?
Prunal, this is a regular phenomena. You will see these 50 screens plus minus happening quarter on quarter, because what is happening is that because of digital cinema, now the single screens have been getting a lot of content, and what they are doing is that they are converting themselves into multi-screen complexes.
Right.
So, from an 800 or a 1000 seat single screen, now they are converting into a 3-screen complex of 200 seat or 250 seats each. Or the varying sizes. They are creating a small cinema of 75 seats and 200 seats to cater so that they can play multiple content, because now content has become available to them.
Right.
So there are some screens, 10-20 screens here and there which do close permanently. There are these screens which either shut for renovation, if they were 2-screen complex, come back as 2-screen, or there are screens which keep shutting, and come back as, instead of a single screen complex, as a 2 or 3 screen complex. So I think last quarter, Sushil, what was the number? 104 screens actually shut down for renovation, and for, as compared to the Q3 of last year, this year when we compared, 104 screens shut just for renovation and for converting themselves into multiplexes as compared to that. So, this keeps happening, and in a scheme of things of 5,300 screens that we have, or close to 3,900 ad screens that we have, 50-70 screens plus minus you will keep seeing, because they are all single screens, their behavior, utilization patterns are very different.
Right. So if they convert into multiplexes, by when do we see them coming back on live?
They keep coming back.
Okay.
It keeps happening. They keep going, they keep coming back. Some other goes. That's why you will keep seeing sometimes you will see 20-30 screens have got added. It doesn't mean that new cinemas were created. Sometimes you will see 30-40-50 screens are less. So this 50-70 screen plus minus keeps happening quarter on quarter.
Okay, fine. Thank you so much.
Yeah, thank you.
Thank you. Next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. The way caravan cinema business is going, when do you expect it to break even, sir?
We are moving towards that. As I said, that we could have sold more vans at a lesser price, because initially when the business started, the price we were not getting, so we had to sell at a lower price. UFO on screen also, it happened the same way, that we had to start selling at a lower price. Now we are finding it very difficult to increase the price, and that is where we are waiting in UFO on screen advertising for the right time to come, which we discussed earlier on the call, that 7-8 minutes, creating this currency of measurement, etc. We did not want to, learning by that, we did not want to go into this business in a big way while selling more vans at a lower price, because that means more overhead, less margin. So right now we have concentrated on increasing the price, and as I mentioned earlier, this quarter is more than twice the price as compared to that quarter, last year's quarter. So I think it's a matter of couple of quarters.
So what is the current yield per month per one?
I could only give you the percentage term that we have doubled. if I give you the number per yield per van, that is little bit price sensitive information, because that the clients, if I make it on the investor call, then the clients use that number, and because many clients we charge much higher than that. So I don't think it will be appropriate for me to speak that number. But as I said, it has been more than twice as compared to last year.
And how it compares sequentially as compared to last quarter?
Sorry?
How it compares sequentially as compared to last quarter, second quarter?
I didn't understand your question.
As compared to Q2, how the rate?
Q2 is flat. So Q2 and Q3 we have... It's flat. It's flat. For last two quarters, that is what... we restarted the operation after monsoon season only in October. So that is when we decided that when we reopen, we will reopen at a higher price. So Q2 and Q3 we have been able to, Q3 we have been able to do it. Q2, there was hardly any operation actually. Q2 was a monsoon period. Yeah.
Okay, sir. Thank you.
Thank you, sir. Thank you.
Thank you very much. And that was the last question in queue. I would now like to hand the conference back to Mr. Urmil Shah from IDBI for closing comments.
Yeah, hi, thank you everyone for joining the call, and thanks to the management for allowing us to host the call. Thanks.